Hi, good evening, traders. 7th of March 2022. This is Monday evening, 23 minutes past 8 p.m. And it's getting worse. Well, we had a gap down, quite a fierce gap down actually in today's trade. Over 400 points negative at the open. But the close isn't as bad as it was during the day's trade. 365 points down near month Nifty futures, 2.25% to close below the 16K mark at 15,893. Um, so let's talk about this index in a little more detail. So we have a clear cut breakdown from this channel border. And with today's move, the index has essentially come down to its previous congestion zone, which was here, from which we had the big breakout, which led to this rally. And now the index finds itself back to that particular zone, which happens to be below psychological whole number 16K on the downside. And we've managed to see a little bit of intraday bounce back. So nothing new from the perspective of the underlying trend, which is still down. The moving averages are opening up. The selling is getting fierce. It's reacting to the overall conditions, situations outside. Um, and the gap down held fairly okay. In terms of Fibonacci projections on the downside of this move, a couple of these levels have been taken care of really well. So I would do good to deselect them, and the only level that stays is down here. But there are few signs of price momentum divergences shaping up on the daily time frame. If you come down to the 75-minute time frame, you will also notice similar kind of a divergence shaping up. This does not necessarily mean this is it and you'll have a reversal. What this means is going forward for a day or two, it can consolidate, and then that can lead to a short term bounce back or a revival of selling further down. That depends how we react at tomorrow's open and tomorrow's trade. But looking particularly at the way today's trade played out, this is the 5 bars of today's trade in the 75-minute time frame. My little experience suggests that we might be looking for a short-term bounce back within the next two trading sessions. The signs are not strong enough that this is it, this is the bottom. No, um, I cannot confirm or expect that right now because the signs, as I said, are not strong enough. The signs are enough to suggest that probably it will try and test towards that 16,200. We'll try and close this gap down in the next couple of sessions. I will be horribly wrong once the index breaks below today's low. That is this one. And if it falls further down, then all this expectation goes down the drain. Um, the global markets are kind of okay. Yeah, SGX is trading close to that 16K mark now. It's up 100 points. US markets have opened and they are marginally negative. Europe is kind of mixed. So let's see how we behave um, tomorrow morning. But I think possibility of 16,150 to 16,200 is there. Just a short term bounce back maybe. Um, I don't have signs from the volume profile or any kind of volume play which will suggest that a strong bottom has been made. No, it's definitely not there. But this is not a bad zone. This is not a bad range. Sub 15,500 to psychological 16K. The index, if it plays out well, the index can actually try and bottom out, create a soft landing, base formation, whatever you call it. Will This is not a bad zone from where it can create that kind of a base formation. So if you've been sitting on short positions, you've definitely been enjoying this fall. I would suggest that try to trail your stop losses and protect your profits. And if you have not managed to go short, then I will suggest to wait out for the bounce back to finish and then look to sell on the rise. Bank Nifty was quite disappointing in this particular leg down, and it has clearly broken down this particular rising channel, and it's heading towards its previous swing lows, which is down here. Um, Banks were weak, financials were weak. The pockets of strength that was there was amongst few IT stocks and, of course, the metals, which held really well. This is the top 15 stocks which make up the Nifty, and you can see that Infosys, HCL Tech, sorry, I have marked them green because I expect a bounce back from them, which played out a little bit today and probably going forward for the next couple of days. A short term bounce back from the IT is likely. Let's see Infosys, HCL Tech, TCS, not able to participate in the bounce back that we noticed in the rest of the IT stocks. Metals, of course, did pretty well. And there's the odd stock like ITC and Bharti Airtel. ITC also has the potential to, for a retest of 235 or little more than that, it has that potential to move further up. So there are some odd stocks which can prove as a pocket of relative strength. But then, if you take a look at Maruti and if you take a look at HDFC Bank or ICICI Bank, this is like a one-way fall. It's like a rock coming down. Um, so there's definite damage that we notice in this particular fall um, within even quality names like HDFC Bank, iBank, and Maruti. So this is not the market to be taken very lightly. It is reactive to multiple events and reasons for which it is coming down like this, and it should be taken as a sign of a healthy correction. Now, this is a weekly charts. We had walked on it quite a bit. And as you can see that we had spoken about that 15, 8, 90, 16K, this particular zone. So this is essentially that 15,500, 16K zone that we had marked, all right, in our previous videos. That's exactly where we are. It can correct further down, but this we had a great run, didn't we? We all enjoyed the kind of appreciation that the market gave. This was over 100% a rally, and we are probably down 12, 13% now from our previous peak. So this should be taken as a healthy correction. It's just that it's correcting due to some reason and events which um, are very external and which do not see any signs of any kind of control or any kind of slowdown. So this pain might continue further down. In between, it will give us some shallow short-term bounce backs, and I think we can expect one of such bounce this week going forward. So trade cautiously. Try and keep your trades limited, very short term or very long term. Those 3 days to 5 days kind of trades, I don't think will play out that well. Intraday trades might play out well if you catch them in the right direction, and very long term positions, then you can definitely start to create. I'll keep a close eye on the IT stocks. I'll keep a close eye on ITC as well in the next couple of trading sessions. I hope you've been trading well, and this fall, if you've been primarily on the long side, has not affected you so much. Hopefully, sitting on the cash. Long-term players can definitely start to nibble into few of their favorite large cap or mid cap stocks from here on. Till then, trade well and take care of yourselves.